Hello everyone. So I'm going to discuss few details about controlling module in SAP. So the one which we are going to discuss is part of ECC, not S/4HANA. So we are going to discuss controlling, which is part of ECC. So SAP ECC controlling we are going to discuss. So we are going to discuss the fundamentals. So let us see. So our agenda is some few details and fundamentals about controlling and how controlling is integrated with financial accounting and what submodules we are going to cover as a part of controlling. Now I'm in slide number 3. So what is this SAP FICO? SAP FICO module, if you see, FI stands for financial accounting and CO stands for controlling. So financial accounting is what? Financial accounting means it is called external reporting. Financial accounting means external reporting. That means whatever reports that we draw from financial accounting module, we will be sharing with outsiders. So who are these outsiders? Outsiders means the banks, tax authorities, and stakeholders. Stakeholders means the shareholders. So now if you see the reports like balance sheet, profit and loss statement, which is also called income statement, and also the cash flow statements, all these reports which we draw from financial accounting module will be shared with outsiders. Okay, definitely balance sheet has to be shared with the shareholders and income statement also have to be shared with them and even to the tax authorities and even to the banks as well. What if we want to get some loan from the bank? We will have to share all this, right? We will have to disclose all this. So all these reports that we draw from financial accounting module have to be shared with the outsiders. Because we are sharing all these reports from outsiders, this module, which is FI module, is external reporting module. Okay, and please remember, FI module has to be implemented for sure. This is a mandatory module. The reason is in FI module, we will be creating an organization unit called company code. Company code is a legal entity. Okay, so at this legal entity level, we draw all the reports in financial accounting. And this legal entity is required even for the other module consultants in order to go ahead with their configuration setting. Suppose let me take an example of person. Means material management. Okay, so material management consultant is doing some configuration. What configuration he does? He creates a plan. He creates a purchasing organization. So whatever organization units he is creating, those have to be assigned to company code. So that means by the time material management person or consultant is doing his own configuration settings, FI person should have created the company code by that time. So FI is the very first module to be implemented. It is also called centric module. This is the very first module to be implemented in any implementation project when it comes to SAP. Okay, fine. So now let us see what controlling is about. Controlling, the name itself is saying you're controlling something. What is that we are controlling? We are controlling the cost. See, any company would want to control the cost so as to increase their revenues. Okay, so that is the reason why we will have to control the cost. As a part of this controlling, see, even in our daily lives, if you see, I would want to control the cost, okay, for my next month. So what I will have to do, at least by this month end, what I will be doing, I will be planning, okay, next month, my expenses have to be so and so, some X amount. So my expenses for next month shouldn't cross X amount, okay. So this is what I will be planning, at least by this month end. So this planning I'm doing for next month. Okay. And next month end, I have done all the expenses. Next month end, what am I doing? I will be calculating, okay, previous month end, this is what I have planned. And in this month, I have done this many expenses. So whether I have crossed my planned amount or my expenses are within the limit of my planned amount, I will be checking. That is how I'm controlling my cost. Same way, even companies also, okay, control the cost this way only. They will be doing planning, and this planning is every month they will be doing. Planning is month wise, whereas budgeting, if you see, it is year wise. Okay, so there is difference between planning and budgeting. So they will be planning every month, and they'll be checking the expenses also. So, and they'll be finally checking whether those expenses are within the limit of the planned amount or not. That is how they control the cost. Okay, so this controlling is done with the help of controlling module. We need a separate module because planning, okay, everything cannot be done in FI. In FI, if you see, only the actually incurred expenses or actually received amount, that means all the actual values only will be present. That means the one which has really happened, those are actuals. Whereas if you see controlling, those are notional. You can plan. Okay, so planned amount is not an actual amount. Okay, so if I'm planning some 1000 INR for the next month, it does not mean it has actually happened. It has actually incurred. Okay, so those notional amounts, planned amounts, budgeted amounts will be present in controlling. In FI, no plan, no budgets, only actuals will be present. Okay, so that is the reason why we need a separate module to do this, planning and budgeting. And in controlling, one more thing is present, that is variance analysis. Variance analysis means the difference between planned amount and the actually incurred expense amount. That is called the variance. Okay, so you can draw the variances also from controlling. Okay, so this controlling is about controlling the cost, and whatever reports that you draw from controlling, it is for internal management. Banks, tax authorities, stakeholders will not be interested to see how we are controlling the cost in our company. It is none of their business. Only the internal management of that particular company will only be interested to see, okay, this month, by this month, how much of variance has happened. Variance means how much we planned and how much we have controlled, all this. Okay, so only internal management will be interested to know all this. That is the reason why controlling module is internal reporting or management reporting. Okay, so when you do certification on controlling, in the certification, you will have to go to SAP Hub, right? Certification Hub. There, you will not be able to see controlling. You will be able to see management. So kindly remember, controlling other names are management reporting or internal reporting. Okay, so this is in brief about FI and CO. CO is not a mandatory module to be implemented. But if at all you would want to control the cost, then you will have to implement. 99% of the companies will implement because every company would want to increase their revenues by controlling the cost. Okay, so this is in brief about FI and CO. Now let us go to the fourth slide. So, almost all these I've covered in the previous slide only. So controlling is important module. Why it is important? Because we are controlling the cost with help of controlling module. And supports coordination, monitoring. We are monitoring the cost, okay, and optimization of all the processes. So when I'm controlling, I will be optimizing all these, right? Cost and all. Now, please remember, controlling is all about not only cost, but also the revenues. Controlling is about P and L. P and L means what? Profit and loss. Okay. Profit and loss means profit and loss statement. What is that you are able to see? All the incomes and all the expenses. Controlling is all about income and expenses. In controlling, we never discuss about balance sheet elements. That means balance sheet means what? Asset and liabilities. In controlling, there is no question of including the balance sheet items. So that means only P&L GL accounts will be seen in controlling module. This is again an interview question. Interviews might, confuse you this way, like what kind of balance sheet is included or excluded in controlling. Any balance sheet item, if you see, is not at all included as a part of controlling. Controlling is all about P&L. That means profit and loss. That's it. Okay, fine. So controlling involves recording both the consumption of production factors and the services provided by an organization. See, as a part of production, how much of cost has been incurred? Where is the cost incurred in production? See, we are getting the raw material from the vendor. For that raw material, we are paying something. To get the raw material into our plant, plant means a factory, we are again paying some amount as a form of freight. Freight means the transportation of the material. Okay, and in order to produce the finished goods, we might have the labor or the machinery in our plant. So machinery running or wages paid to our labor, all these are expenses only. Okay, so those will be part of consumption of production. So all these, are a part of consumption of production. So many, expenses, indirect expenses and indirect expenses are involved as a part of production, which we will be discussing as a part of, product costing and all. Okay. So controlling includes managing and configuring master data that covers cost and profit centers, internal orders, and other cost elements. See, in controlling, we will be discussing cost objects. Cost objects means the one which will be saving the cost in them, capturing the cost in them. So those cost objects are cost centers, internal orders, profitability segment, that is not mentioned here, but that is also there. Profitability segment, or even the profit center. In profit center, we usually store the revenue. Okay, so revenue in profit center, see the name itself is saying profit center. It is storing the revenues. So revenues, cost, or revenues. In internal orders, we can save not only cost but also the revenues. In cost centers, we can save not only the revenues but also the cost. Okay, so like that, we will be having so many cost objects. Okay, now the main purpose of SAP controlling module is planning. So just now we discussed, we will be doing a lot of planning. Controlling is all about planning. Okay, so it enables you to determine variances. So variances means the variance analysis, what exactly has been, okay, the deviation from the planned amount. Okay, deviation means how much I have exceeded or whatever my actual expenses. Okay, whether it has met the planned amount or it has, it has been more than the planned amount. Okay, so that we will be comparing in the month end as a part of the reports. So this is how we are doing the controlling of the cost. Now, slide number 5. Controlling integration with financial accounting. In financial accounting, we will be having the GL accounts. These GL accounts, which are P&L GL accounts, profit and loss GL accounts, can be converted into cost elements. And cost elements are the one which are carrying the cost or the revenues from FI to controlling. This is where integration occurs between FI and CO. Okay, so the GL accounts, which are P&L GL accounts, can be converted into cost elements. Okay, so these are the cost elements which will be carrying the cost or revenues from FI module to control. So data flow is happening. How? This way only. Okay, from the cost element. Data flow relevant to cost or revenues. Controlling is all about cost as well as revenues. Okay, so the same. Okay, whatever I have told you just now. So at the same time, the system assigns the cost and revenues to different controlling account assignment objects. So in the previous slide, we discussed there are cost objects which will be storing the cost and revenues. So apart from the cost elements are carrying the cost. Then what is the object which is capturing the cost? These are the objects which are capturing the cost, which are being transferred by cost elements. Okay. Now we are in slide number 6. So all these are the submodules that we will be discussing as a part of controlling. Cost element accounting, cost center accounting, internal orders, product costing, profitability analysis, which is also called COPA. and profit center accounting, PCA. Actually, profit center accounting is a part of both controlling as well as FI. Okay. Now, cost element accounting. If you see, there are two types of cost elements, primary cost elements and secondary cost elements. Primary cost elements are the one which are converted from FI into cost elements. That means in FI, we have P&L GL accounts, right? Profit and loss GL accounts. So these profit and loss GL accounts are converted into primary cost elements. Okay. Why they are converted? Because we need these amounts, the cost and revenue amounts, into controlling as actuals. In FI module, all actuals are there, actual postings, both revenues as well as the cost. So these amounts have to be transported or transferred to controlling module, which will happen with the help of primary cost elements. And these primary cost elements are nothing but the P&L GL accounts. Okay, fine. Okay, so now primary cost elements is what we have discussed. Now, secondary cost elements. Secondary cost elements are the ones which are not GL accounts. That means these are not part of FI. These are part of controlling. These are pure controlling objects. Now, when these are pure controlling objects, then there will not be any question of transporting the cost from FI to controlling. Okay, so that means what? That means these secondary cost elements will help you in period end activities in controlling. That means, like if you see, the assessment is there, distribution is there. Okay, so all these are the period end activities in controlling. Period end activities means the activities that we perform at the month end in controlling. So why I'm saying period end? Month end means period end. In SAP, we call month a period. We call month a period. That means when I say period, it is month. So in the month end, we will be performing settlement, assessment, distribution. All these are the activities that we perform, wherein we will be using the secondary cost element. Actually, these secondary cost elements, they are not transporting any amounts from FI to controlling. These are not connecting FI with controlling. These are purely controlling objects. Okay, they don't get any amount from FI at all. So these help in doing the period end activities. Okay, so this is what cost element accounting is. And cost center accounting. Cost center accounting means it is a cost object. Okay, usually a department is created as a cost center. A person who is controlling the cost can also be created as a cost center. Okay, so this is a cost object which is capturing the cost. Okay, and if you see, we have few more cost objects like internal orders. Okay, so internal orders are also cost objects, just like cost centers. Now, what is the exact difference between cost centers and internal orders? Internal orders, if you see, these are created for a specific purpose. Okay, whereas cost centers, if you see, these are created for generic purpose. Okay, so there is a lot of difference between cost center and internal order. So once for the specific purpose for which the internal order has been created, once the purpose is completed, we will be closing the internal order. Whereas cost center, this cost center, if you see, we do not close it. Whereas internal order, we will close once that specific purpose has been met. Okay. Now, product cost controlling. Product cost controlling also, if you see, it calculates the cost. See, we are producing finished goods. Okay. So, the finished goods that we produce, we will have to fix up some price to it. So how we will have to arrive that? We will have to take into account all the expenditure that went into the production, okay, of that particular product. So all those costs I will have to take into account. These costs can be direct cost or indirect cost. So many types of costs are there. So all this I will have to take into account. Okay, so we will be seeing in product cost controlling how all this expenditure we will be taking into account. So now this will help you in calculating the price. Okay, so that is product cost controlling. Now product cost controlling is of two types. Okay, one is planned one, another one is actual one. Okay, actual one is also called WIP or results analysis, which will be a bit tedious to execute in our SAP server. Planned product costing, if you see, it is, of course, it is complex topic as well, but you will be able to execute, okay, without any issues. So as a part of our syllabus, we will be discussing planned product costing, which is very much, which will suffice for your interview. Okay, in interviews, if they're asking about product cost controlling, you can definitely tell about the standard costing, which is nothing but planned costing. Okay, so we will be discussing that as a part of our syllabus. Now, profitability analysis, which is also called COPA. See, the name itself is saying profitability analysis. That means you are doing all the analysis of profitability. Okay, so profitability analysis means what? You're analyzing the profitability from different dimensions. Okay, so what are those dimensions? We will be discussing in when we execute this topic, we will be discussing. Here it has been mentioned, okay, customer, distribution, channel, market segment, all these are, the characteristics. Characteristics are nothing but the dimensions from which we will be analyzing the profitability. Now, profit center accounting. Profit center accounting is to evaluate profit or loss of individual area within an organization. Okay. So profit center means it is area of responsibility. Okay. Actually, profit center is part of both FI as well as controlling. We will be discussing both. The profit center accounting, which we will be discussing as a part of FI, is new GL. And profit center accounting, which we will be discussing as a part of controlling, is classical PCA. Okay. So all these are definitely part of our syllabus. So I hope you understood this, and thanks a lot.
Like, subscribe, and press the bell icon.